Hi everyone. Good evening. Welcome back, you guys. I'm Miss Maynard, and this is our fourth session for POA, the fourth free session, I must say, for Principles of Accounts for Form 5. Again, welcome you guys. I hope you all are doing well. You all were able to go back to your recordings, make your notes, and most importantly, do your homework. I had given you all a homework question um last week, and I said if you all could recall that whoever were to give me that gross profit figure, right? I wanted to get a gross profit figure from the homework question. Yeah, it could either be the gross profit or the adjusted gross profit. Any one of them I wanted you all to do for me from that question from J. Jordan. Anyone did it? Okay. And I did say that I have a treat for you all as well for those who did it. So let me see. Shaq, I am seeing your figure. It's a little too high, but I love the attempt. It's still an attempt. Let me see if anybody else, you can message me in the chat. That homework question was to get the gross profit figure for J. Jordan. I wanted you all to do the income statement. So let me see if there's any information coming in the chat. I'm seeing yes, but I'm not seeing the figure. I'm doing fine, thanks you all. But I want to find out from you. What is the figure for the gross profit? Some of you all don't know what I'm talking about. How is that possible? You all, I give a... Yes, now, let me just see if I can share my screen here. Hold on. I'm not sure if you're messaging me in the chat. I'm seeing hands up. Yes, so far I'm seeing one good answer. Very good, Asia. Very good. A little lower. A little lower, Shaq. Let me just share my screen. So this was the question from last week, right? And we have a trial balance which was extracted from J. Jordan, a trader, as of December 31st, 2008. And these were the details from the trial balance. You were able to tell me if it's debit or credit, and it totaled. So you know the accounting cycle tells us as soon as your trial balance off, and it's total, that means it balance, you look at your additional information and you are then now to prepare an income statement and a statement of financial position, also called trading and profit and loss account and the balance sheet. So I only saw one answer. So let's not stall. I hope that at least you all attempted it because moving forward, you see, from September, if even if your entire answer is wrong, which I highly doubt that will ever be the case, after all these amount of years of doing this, there's no way your whole thing will be wrong. But your figure might just have a little, probably a $2 more, $2 less, or 200. It could be a few amount of monies that are off. But that's okay. At least there was an attempt. And you know, when you come and you see your error, you would actually say, oh, now I know where I went wrong. Then come in class and get answer. Answers are not going to get you all anywhere. And I know you all could get your answers easy from all different sources. But end of it all, would you all actually know where you went wrong? That's not what we are here for. We are not here to just get answers and come and present it and impress the teacher. You know, they like to impress the teacher. Trust me, I rather see a hard-earned, worked answer than nothing at all or just an answer with you don't know anything. So let's understand from September, I will be very particular when it comes down to homework and how you all go about presenting them. You all have, I'm training you all to be accountants. Yes, future accountants later on, owning your own business, managing your own money. How we get to that stage, we have to do our work. We have to put in our work here now. And I had some of you all messaged me on WhatsApp because you all didn't get a screenshot. So remember, you guys, that if you all have any issues or any concerns with any questions we have been doing or any of the homework questions, it's good to ask a question, right? There's no such thing as a stupid question. And I send you all back my number here in the chat. So in case you all didn't have the question, you could have messaged, right? For some of those who are now messaging me here that you didn't get it, you could have messaged. Don't sit there and be like, oh, feeling sorry for yourself that you didn't get the homework. You could still message me, right? So the message is in the chat for everyone, my contact number, because next week, please God, right, being our last class, we still have some work cut out for us before this free summer program is finished. All right, so let's get started with this question because I only saw one answer, and that's not acceptable. But I'm giving you all that fair um, information for next academic term, which is September. Homework is important. So we have here a trial balance, and what we see are some additional information. So we are now going to prepare this income statement and the balance sheet from this question. And I'm not going to rush this class down. I want you all to understand the principles behind every entry I'm about to input into my Excel sheet, into this answer. All right. And because I'm using Excel, my calculations will be a little bit faster than you all alone. Because you know why? Excel calculates for me, right? When you're preparing your IAs and your SBAs, yes, it's a good place to present your answers. So the first thing that we need to do, let me just get this a little bigger. The first thing we need to do whenever we are preparing any accounts is to prepare our headings. So let's just ignore the balance sheet for a while and we are focusing solely on the income statement. So we're starting up with this question. So you all have it. You all have the question in front of you guys, right? If you all don't, please take a screenshot. It's in the textbook as well. It is 26.11 in the 5th edition, 28.11 in the 6th edition. The only difference in these questions will be just the date. So I believe the 6th edition is 2013 or so, some date, some year. I use the 5th edition to copy this question. So don't be alarmed and freak out if you don't see this date. What you should be looking for is the name of the business and the figures, and obviously the additional information. That stays the same. And if you're using the 4th edition, same will apply. And for those who are using this 3rd or the 2nd edition, the same will apply. So don't get alarmed with the different dates. So my textbooks are the 5th edition and the 6th edition. All right? So let's get started for the final time. Let's get started. So you all have the question? Take a screenshot because I'll hardly be going back to it for a long period of time. We are presenting this answer here now. The first thing that we need to start up with this question is obviously have your pen, because you all are going to prepare your answers using a pen. That is an ink pen, not a pencil. I know some of you all love to write your answers in pencil. No. Let's get in the habit of preparing our answers with pen. That's the first thing. So you have your pencil at the side. That's the second thing. Why would we need our pencil is to tick off the items that we are going to account for. So we know the format for our income statement already. Yes, we do. We have the format which I believe I gave you all last class. This is the whole format. So if you all are now joining in for the first time or never saw the format of an income statement or a balance sheet, please do let me tell you what you have to do. Screenshot it, take a picture. This is not going to change. This is what CXC is going to be correcting for your exam. So please take a picture, take a screenshot. Milan, you're correct, yes? Good. Right. So we are going to actually start with this question. And to start with it, we are going to start with the 1 mark. We're going to start with the 1 mark part of the question, which is the name of the organization. And you're going to start with your income statement. And in the third line, you're going to have for the year ended. Did you all have that? Yes? Did you all have that? Did you all start up with that? Let me see. Thumbs up if you all did. Good. Excellent. So let's do that. So we have the heading. J. Jordan, income statement, and we are going to put for the year ended December 31st, 2008. That is what the format tells us at the first start, and that is what I have here. Now we are going to start ruling up our columns. So I am just going to simply put a $sign just to represent my columns. So I'm going to have 3 columns. We good so far, everyone? Thumbs up if you are. Yes, everybody good so far? My 3 columns are there. You all see my screen, right? Everyone, just give me a thumbs up, just making sure. You'll see my screen, hearing me clearly. Testing. 1, 2, 3. All right. So that's your 1 mark there already in the exam. Now we're going to start with the format. In the format of the income statement, we start off with our sales. That's the first heading. That's the first item in the income statement. So sales is the first item. So therefore, we need to look for what the sales figure is. Sales is 120, 320. So with my pencil, because obviously I'm using the computer here, but when you all are preparing a question like this, you use your pencil to tick off the items that you are accounting for. I'm not using my pencil, so I'm just going to highlight it as yellow, just to show that I'm going to account for it now. So sales is 120, 320. So I'm going to put it over here. 120, 320. What's the next format. Next format says, let me get the format for you all. After sales, we less our return inwards. So you all have the format, so we're going to be going back to this. We're supposed to know it by now, a little at least. Return inwards is how much? 1384. So therefore, we are going to put 1384 as our return inwards, and we are lessing it. So when I come here, look what I'm going to do. Less return inwards. It's also called sales return. Yes? Sales return. So sales less return inwards, giving us our sales return. When we do that, we're going to get our net sales. And our net sales figure is when we minus it, you can always double check with your calculators. Oh yeah, not your phone, huh? I didn't tell you to calculate this using your phone. Calculators, please. So 120, 320 minus the 1384 is 118,936. That's our net sales. Then we have our subheading called less cost of goods sold. We heard of this so many times. Now we're going to apply it. So less cost of goods sold, and we're starting up with our opening inventory. Where do we find our opening inventory? Let's look. Let's look through the question and y'all tell me where is my opening inventory and how much is the opening inventory or opening stock? Opening stock, opening inventory. I'm seeing two sets of stock here. I'm seeing the stock in the trial balance, but I'm also seeing a stock here in the additional information, which is part A. So which one? Am I going to use this one or am I going to use that one? The first red or the second red? Which one? How much am I using as my opening stock, you guys? This is, you're preparing your income statement as at 31st December, sorry, December 31st, 2008. This is December 31st, 2007. And this here is December 31st, 2008. That's the end of the period. So, I mean, I know my English a little okay. And I can see that this is my opening stock because this is the date. You can look at the date. But another thing that you all could also look for whenever you see two sets of stock, the one in the trial balance, the stock that is in the trial balance is my opening stock, and the stock outside my trial balance is my closing stock. That's a second hint for you all when you all are doing questions like this. So I'm going to unhighlight them so we know which one we are counting for. I'm going to take that off and I'm taking off this here as well. And the one that we're looking at is the one in the trial balance. Right? So I'm going to highlight it back yellow. So I'm going to have my opening stock here now. So opening stock amounted to be 30,816. What is my next part of this format? The next part of the format after opening stock is to have your purchases. And what is our purchases figure? Let's look. Purchases, 84,920. So I'm going to take that 84,920 and I'm going to put it as purchases figure. Yes? Then the format tells us we have to look for carriage inwards. I'm not making this up. Like I always tell my students, as much as I might want a song brilliant and stuff, that is not really the case. I just following formats from what CXC or whoever created this format of our income statement and balance sheet. I am following their format. So therefore, you all also need to follow the format. We are not making up anything in the exam. We have a format in front of us. All we have to do is plug in our figures. So we just said we're looking for the carriage inwards figure. So look at here, third item, $309. So I'm going to take that figure, yes, 309, and I'm going to put it into the format. So I'm going to add carriage inwards, and the amount is 309. Remember when I told you whenever we add something, we get gross, and whenever we less, we get net? I'm repeating. Whenever we add, we get gross answers. Whenever we less, we get net answers. Like for example, the sales less return inwards, we got net sales. But if we have purchases, add carriage inwards, it's going to give us a gross purchases figure. And that is when we add up these two amounts. Only these two amounts we are adding up. And that amount will be 84,599. Please, you all double check it. Double check your calculations. So let me see what you're talking about here in the chat. Very good. Milan, excellent. Good. Alicia, lovely. So we just plugging in figures. Y'all have it already. That's great. So right after our gross purchases figures, which is the 84,599, we have to do something. I'm not making it up. This is what we're supposed to do. We have to now less return outward. You gotta take some time to remember this format. Write it over and over and do questions over and over. You remember. How much is return outwards? Let's look. That's discount allowed, discount received. Return outwards, I'm seeing it here now, 810. So I'm going to take that figure and I'm going to plug it in over here, 810. I am lessing. So remember I told you all whenever we less, we get net answers. So when we less our return outwards, we're going to get net purchases. So we're minusing the 84,599 from the 810, and we should get 83,789. Are we all okay with that? Thumbs up if you all are good with what we have so far here on the screen. Yes? All right. Again, if you all have any questions or any concerns, very good. Kai, Kafian, yes, you have the answer correct. Good. And Rihanna, lovely. Next, we are going to get our cost of goods available for sale. How do we calculate cost of goods available for sale? CXC tells us that we need to take our opening stock and add our net purchases figure. So you see these two lovely figures that I'm highlighting here? We need to add it. And when we add it, we should get 114,605. Next part of the format is the less closing stock. Didn't we just speak about closing stock just now? We just now spoke about it. We said we had stock in the trial balance and we had stock outside the trial balance. So if this was closing stock, common sense will tell us that the next stock will be closing. And that's outside the trial balance, and that amount is 36,420. So I'm just going to tick it off because I'm going to account for it here now. So closing stock is going to be 36,420. Now, I know I just said when you less something, you get net. When you add something, you get gross. Because you're coming down now to the end of this income statement, the whole purpose of this whole section that we are calculating here now, this cost of goods sold section, is to calculate cost of goods sold. So when you less your closing stock here, your answer will now give you, you have it, cost of goods sold. That's what we are calculating in this entire section. So our cost of goods sold, when you minus your closing stock, will be 78,185. You see how short, y'all, this is already giving you about, let me say, 8 to 10 marks already in the exam. 8 to 10 marks. And I'll give you one more mark for the heading already. You'll see? So much work, but so easy, right? Just following the format. All I did was just plug in figures. So let's continue. We got our cost of goods sold. I had asked you all to get me the gross profit, and I saw some of you all message me, and I acknowledged you all that you were correct. The gross profit is what we are calculating here now. How do you calculate gross profit? We take our net sales and we minus the cost of goods sold. See those two lovely figures? We are going to minus it to figure out if we got a gross profit or hey, we may get a gross loss. How do you know? Once your sales is greater than your cost of goods sold, you get a gross profit. This figure needs to be higher, bigger than this figure. And I'm so far seeing it's higher, so we get a gross profit. Obviously, the opposite will apply if there was a gross loss. So we have here now our figure, when you minus it, 40,751. So that is our gross profit figure. But we're not finished there yet. We have to account for all our expenses, but not so fast. Not so fast, you all. Before we get to our less expenses, because you know the format tells you, when you get your gross profit, you minus your expenses. Come on, you guys. We reach this far. We don't go straight to our expenses. We look for anything that is going to increase our profits. Expenses will come right after. So you look at the additional information, you look at your trial balance, and I want you all to tell me what will increase my gross profit figure? What will increase my income? Let me hear from you guys. Tell me, what else should I add to my gross profit? Remember I gave you all a format, right? So this was the gross profit here, and I had other incomes. Are you seeing anything like this in this question? So everything for you all to message me. Very good, Milan. I know I saw someone else message just now, but yes, Michaela, you all are correct. Great. So I'm going to look for my discount receipt, which is this figure. Discount receipt will add to my gross profit. Hey, the business got J. Jordan, the business, got a discount. He received a discount. So it's going to add to my profits. I'm not going to pay so much more, so much money for the item, whatever he bought, but a lesser price. So that's going to definitely increase my profit. So I'm going to take this figure and I'm going to add it. So I'm going to have this. discount received, and the amount for discount received, we just saw it, 506. I'm just double checking. 506. Good. Are there any other incomes or additional incomes? Look at the additional information. You should be looking at this all the time as well. When you look over here, throw your eyes over here as well. And when you throw your eyes over here, go back to here. You must be looking at the whole question. Any other items that will add to our income? Remember last class, we spoke about adjustments. We spoke about accruals, we spoke about prepayments, we spoke about if your provision for your doubtful debts were to decrease, by meaning instead of you creating a safety net out of your profits for your customers, you're decreasing your safety net. That means you're going to keep back some more money for your profits. Anything sung in like that in additional information? Afia, you're very close. I will not lie, you're very, very close. You look at D. Look at item D. Item D is saying provision for doubtful debts to be reduced. I am happy to hear that. I am happy as the owner to hear my provision for bad debts going down. When my provision for bad debts go down, that means my customers are actually paying me back my monies. And when they pay us back their monies, hey, that will increase my profits. So I'm going to decrease my provision for bad debts. By how much? Let's figure it out. It's supposed to be reduced to 580, but how much did it reduce by? That is the question you need to ask yourself. How much did it decrease by? If you all throw your eyes on this part here, remember your eyes must be hurting at the end of every income statement balance sheet question, huh? If your eyes not hurting, that means you did something wrong. We have, yes, provision for bad debts in D, but wait. We have a provision for bad debts as well in the trial balance. This is the old provision for bad debts, and this is the new provision for bad debts. And if you all can recall from the PowerPoint presentation last week, right? Last week I said to know how much it increased or decreased by, you have to find the difference. So this is the old provision for bad debts, and this is the new provision for bad debts. So I need to find the difference. 658 minus 580 to give me how much is my provision for bad debts is decreasing. Can someone tell me that figure? Cafian, that's sounding correct. Let me see. Cafian, let me see if you're correct. Yes, you are. Cafian got it. Very good, Cafian. So we have it. We understand why we are minusing it because we need to know how much it decreased by so that we can add it to our gross profit. And I put it all working if you all can see it. 658 minus 580. Well, I see my working here, right? Good. Anything else? So we just did, I'm just highlighted to show that I actually accounted for that transaction. You see on that balance sheet or balance? Instead of going through the whole question again. If something is not highlighted, that means we did something wrong. Anything else we have to account for? Very good, Rihanna. Rihanna is thinking. Like an accountant, like you, everyone else here thinking like an accountant so far. Look at item F. Item F. I'm going to highlight it. What does it say? Part of the premises to be lent to a tenant, we're lending out something to a tenant, premises to a tenant who owed $250. When we lend something out, and we're supposed to get it back, right? But they are owing this money. So we lent it out and they're owing us the money. So that is going to add to my profits because it's a rent that we are going to get back, right? The premises were lent out. Tenant is going to hopefully give us back it, but we have to account for it because in time period we are preparing our income statement, December 31st, 2008. So we have to put this in as an additional income. So and it's going to be called, look, I highlighted it here, rent receivables. And that amount, 250. So after you get your gross profit, you add your additional incomes. We getting it back. That is going to give us our total or adjusted gross profit. When we add up everything now, we adding up everything to get the total, which is 41,585. All right. So while you all gave me this figure first, congrats to those who got that figure. Congrats to those. But if you all went a little beyond and got this figure, excellent to those who got to this figure. That meant that you all incorporated your format that we saw last week and you all applied it. You all put it in. You all accounted for other incomes. Look at your other incomes again. So now let us go where I know you all were longing to go to, is to less all the expenses. That's the easiest part. We're going to less all our expenses. So everybody knows an expense. Let's start at the top of the trial balance. And again, always throw your eyes on the additional information. All of this is additional information. So you look at your trial balance and you look at your additional information all the time. Is discount allowed an expense? Thumbs up if you all agree that discount allowed is an expense. All right. A few thumbs up. And we've seen a few. Still a few. Okay. What? You all think discount allowed is a revenue? You are allowing your customers to get a discount. That means the business not going to get much profits from that. If I allow you to get a discount, I'm not going to get the profits that I was longing to get. No. So it's an expense to the business. Discount allowed is an expense to the business. So I'm going to put discount allowed and the amount for discount allowed. But first of all, did anything affect discount allowed over here? Expenses owing, sundry, prepayment, depreciation. Well, all these sound like expenses, but does not affect discount allowed. So therefore, I can just put it in. I can run with this figure. I'm running with it. I'm just going to put it in. $410. That's my discount allowed figure. I'm going to highlight it. Look at this. Because I know I'm ticking off my items and I hope you all are doing the same thing too. My next expense is carriage outwards. Or is it is it where does it go? Is that an expense? Carriage outwards? Is that an expense? Yes, very good, you guys. Carriage outwards is an expense. Good. Good, Rihanna. Good, Nathan. Very good. It is an expense. And the amount is 218. Anything across your affected carriage outwards? Expenses, sundry, motor, rates, depreciation, loan. No, nothing else. So I can run with this figure, $218, and put it comfortably in the expense section. $218, carriage outwards. Next item, motor expenses. Look at that. I don't even have to look through. I'm already know I highlighted everything here. So I reach motor expenses. 4917. Do I run with this figure? Or is anything affecting motor expenses in my additional information? Yes, Cafian. Very good. Expenses owing. Look, we have motor expenses right here. $33. So what did we say when something is owing? How do we adjust the expense which is in the trial balance? How do we adjust it? Very good. Excellent. Mm, is either Malachi? Forgive me if I'm pronouncing your name incorrectly. Walton, you are correct. Yes. Motor expenses 4917, which is in the trial balance, need to be added to the amount that is owing at the end of the period. We need to add what is owing. We add accruals. Think of the letter A in accruals. A. A stands for add. So accruals, we are going to add our accruals, which is an expense owing, to the motor expenses. So 4917 plus 33 is how much? I don't have, I go to 4917 plus 33. I'm getting 4950. Going once, going twice. Y'all got that figure? So I have 4917 and I need to add my accruals of 33. And when I add it, I should get 4950. Yes? All right, good. Y'all got it. Very good. Let's move on. So you're going to highlight this. We accounted for it. Repairs to premises. Is that an expense? Is that an expense? Thumbs up if you all agree that it is an expense. I'm making sure that you all um just now. Wait, no voting yet. Uh, sorry you guys, my chat wasn't up, so I couldn't see if you all had put up your thumbs up or not. But yes, you all are correct. I seen you all now coming in here. Repairs to premises. Hey, we had to fix the doorknob. We had to fix the AC unit. We have to do a little the gate not opening. We had to pay for these things. It ain't cheap, but we had to pay. It's going to be incurred as an expense. But the question is, anything else affecting repairs, which is the expense? Any repairs? Additional information here? I'm not seeing anything, so I could comfortably say I would run with this question, with this answer. Repairs to premises, 1383. Repairs to premises, 1383. Good. Let's move on. Going good so far. What's the next expense? Wages, 16,184. Can I just go with this? No, let's look here first. Anything affecting wages? Anything wages owing to people? Anything like that? No, no, nothing. So, all right, let me run. Let me go and put it in the expense section. 16,184. You're seeing it, I put it in, right? No adjustments. You also, when I made the adjustment, it went in my second column, took my first dollar sign, second dollar sign, third dollar sign. I put it in my first column, or my adjustments. I put the grand total, and then I'll tell you what I'm going to do with my third column just now, because we're almost reaching there. So wages, we accounted for it. I'm just trying to show you all a good presentation. If you all just happen to put the two figures in this column, it will not be wrong. But the presentation of it might look a little cluttered. And remember, auditors have to review your books at the end of the day. Not you, not your friend, not your mother, not your father, nobody. But you see, the auditors, they might write you all up for disorganized work or cluttered work, or you don't want to get a bad audit report. I know that. Or they want to be proud at the end of the day. So let's present our statements properly. And even for the examiners, especially the examiners, that's who we're going to prepare our answers for, CXC examiners. Or they want to confuse the examiners. They're not going to call you over the phone and ask you, hey, was this an ad? Did you minus it? They're not going to ask you. They're not going to do that. They want to see your workings and then your figures in the next column. All right? Hence the instructions. Show all your workings. Let's go to the next expense. So you finish with wages. I'm going to highlight it. My next expense is sundry expenses. Where would I put it? Yes, in my expense section. But anything else affecting sundry expenses? Yes. Kafian is saying yes. Where? Which? Which one? B, yes. Look what it said about sundry expenses. Expenses owing $62. That's another accrual. Accrual, A, it stands for add. So we need to add this sundry expense of 807 to the 62. So I'm going to do that. Sundry expenses, 807. I'm putting it in the first column to show the working. And I'm going to add my accruals. And the accruals is 62. So 807, add the accruals will give me my 869. Excellent, you guys. Aliyah, not hearing from you guys. I'm not hearing from some of you all. CJ, you all okay? Can I get some feedback, Gabrielle? Renee, I'm not hearing from you guys. This is a class of participation. Even if you answer wrong, all of you here to learn together. I'm only hearing from certain students. You all pitch in. Nikayla, or you could even give me a thumbs up to let me know that all you're still with me. All you good? Yes? All right, good. Give me some kind of something. Some kind of anything. For Luke, good. You understand? Lovely. CJ, so don't wait for me to ask. Message me. Do your thing. Message me here in the chat. Very good, Gabrielle. Oh, Makeda, your chat's supposed to be, if you hover your mouse, like you just drag your mouse either to the, What are you using your phone, Makeda? Or are you using your laptop, tablet, computer? What you using? I or your phone. Okay. So if that's the case, your chat supposed to be if you look at the bottom part of the phone, right hand corner, so you will see some dots. Click on the dots and you might see that the icon chats might come up. Right? But you could message me, just like how you're messaging me here now, you can do that. Since you found it, you could do that. Right? So that I can see all your reactions, all your understanding. Good. I want everyone to be on the same page here. So when we added the accruals, we good. Everybody good with that. And I saw your thumbs up. Next item. Let me highlight it one time because we don't want to forget. We accounted for the expenses owing, sundry expenses. I'm going to highlight it one time. Next expense, rates and insurance. That's sounding like an expense to me. But look what they're saying here in addition information, part C. Or letter C. I hate saying part C because it'll be like, who's part C? Who's part C? No, only a letter C. Look at letter C. Prepayment rates 160C. All you know what we ought to do? Well, we have prepayments. Or they're supposed to know this by now. So far we had accruals. We have a 166 there. Yes, Kafian, we have to subtract it. Prepayments does not relate to the period. Think of me again and the gym. If I want to pay more than for a month, instead of for this month, I'm supposed to pay $200, I go and pay them $800. That means I'm paying for this month, next month, the month after that, and the month after that. I committed. I committed myself to the gym. I'm paying a little extra. But that does not relate to the period for the month I was supposed to only pay for. So, as the gym owner, whoever going to prepare their books, they're going to have to take it out. Even though it's, yes, more money coming in to them, it is not relating to the period that they're going to prepare their financial statements. And hey, people prepare statements at the end of the month, huh? We're doing it at the end of the year. By the end of the month, you'll have to take it out. So, rates and insurance, 28.96. Putting it here, 28.96. There's a prepayment, and you all told me which we have less prepayments, and we get 166. We less the prepayment. When you minus it, how much we get? Sorry. We're supposed to get 27.30. Double check that for me. Something's not looking too righteous. Am I correct with that figure? 27.30? 28.96 minus 166. Yeah, yes, that's correct. Good, so we have it. We have it down packed. So that's highlighted one time. We accounted for it, and we accounted for it over here as well in the additional information. We then looking premises at cost. Is that an asset? Sorry, I give away the answer. You know, that's my problem, man. You guys, I just give away the answer before I even ask the question. Is premises at cost an expense or is it an asset? And I said it already, it's an asset. Premises at cost, it's your building at cost, $40,000. That's an asset. Specifically, it's a fixed asset. Yes. So I do not put assets in my expense section, so I will not highlight it. Motor vehicles at cost, that's another asset. I will not put that either. Debtors and creditors, all you're supposed to know this. Asset, liabilities, that will not go in my expense section. Cash at bank, that's an asset. Cash in hand, that's another asset. Drawings, oh gosh. That affect capital. Capital. La la la. Oh, loan is loan an expense? Yeah, we had to pay them back, but that also will be in the balance sheet to represent the paying back. But we have bad debts of 1314. Well, remember what we said about bad debts last week? Bad debts mean, or the common sense answer what they gave me last week. I go and quote unquote it. It is a debt that went bad. Your customer can't pay you back. And when your customer can't pay you back, we have to account for it as an expense. So bad debts, we can put it in our expense section. So let me see if I could find it here just now. Bad debts. And the amount is, sorry, I think I put the wrong figure. Uh, just now, you guys, undo this. Hold on. I think I'm rushing this a little too much. Hold on. Let me make sure I have everything. Oh, I forgot something. Sorry, you guys. So before I reach about that, I did premises at cost, which we said is a fixed asset. Motor vehicles is a fixed asset, but we have depreciation. I went straight to debtors and creditors. I forgot this little item here. The depreciation, accumulated depreciation. We heard depreciation last week. Depreciation is the wear and tear of an asset. It is when we constantly use an asset, we use it, and we probably ready to sell it. We can't sell it for the cost price. It because it depreciated. Depreciation is an expense. So let us see how to account for this depreciation here now. So we see in here provision for depreciation, which is 3860. And then if you look at part E, letter E, depreciation for motors is 2100 for the year. Your aim as a student is to figure out what is the depreciation expense for the asset. Not provision for depreciation in the income statement, but depreciation expense. Look, we have it here. Look at E. Depreciation for motors to be 2100 for the year. So they already told us that the depreciation for the motor vehicles are going to be $2,100 for the year. I'm going to just put that in. That is our aim, just to figure out what is the depreciation amount, not provisions. We just want to get the depreciation expense amount. Then we're going to the next item, but let me highlight it first. I'm highlighting this to show that I accounted for it. Right? Because it had a provision for the accumulated depreciation, this goes in the balance sheet. So we didn't touch this as yet, so I left it unhighlighted. I will fix this in the balance sheet. But we're going back to the bad debts, and we see it's 1314. We said it's an expense. So I'm going to put bad debts, and it is an expense. Anything else here? You guys, whether it be the trial balance or any additional information you're seeing that might affect our expenses? Yes. Look at letter G. You'll give me a second. Right, so CJ, you have to know your format. I'm telling all you, I did not just wake up one day and I remember this tortilla. I didn't just take free lessons just so or pay lessons just so for a few weeks. I remember this, huh? It takes a while. You have to keep doing it to remember it, right? Put any friends now? Yes, Rihanna. There's reading through all the messages. Right. Everybody looking good. Yes. Afia. Lovely. All right. We're not done. We have one more item to account for, and I'm giving only a hint. It's over here. Well, you already see that what we highlighted, we accounted for it. We did part of this here already. Yes, or they already see, or they love hints, eh? Or they really love hints. And CIT gives us hints, and I'll tell all of that later on. G, look at G earlier. Loan interest owing. We have to pay our loan interest, and it is owing to the top on top of that. You take out a loan, you ain't gonna pay back that loan. If you take a $10,000 loan today, by the time you have to pay this back, you might have to be paying X amount more than the 10,000. So interest is an expense. So you're gonna put loan interest, the amount as the expense, and we are finished with the income statement. Let me highlight it one time. We are finished with the expense section of the income statement. Let us total the expenses. Can you all run this through quickly on your calculators? Run it through quickly. You're adding the 410, 218, 4950, 16184, all of those figures. Let me know what total you got. Did you all get this? 34,158. Good. So therefore, I'm still waiting for it to calculate it. I'm waiting. Well, I have patience, you know. We have time to calculate all of this. Tell me what's the total. Well, I got the 34,158. Yes, all right, good. Good. Anybody did not get it? Let me know in the chat. Our aim now is to calculate our net profit. And net profit is going to now be the difference between the gross profit figure and the total expense figure. When you minus it, remember the gross profit needs to be higher than your expenses. So far, it's looking higher, so we have a net profit. If it was lower, we'll get a net loss. It's higher, so our net profit is 74.27. Did you all get that figure? Very good. Shanier, lovely. McKeel, very good. Lovely. So you all got it. Nice. So earlier we finished the income statement. We finished that part. Now we are looking at the balance sheet, which is also called a statement of financial position. So everything that is not highlighted, we are going to account for, but there are going to be instances in between that even if we have things highlighted, we might have to put it as well in the balance sheet. In other words, it affected both the income statement and the balance sheet. So let's get started. So first things first, we want to start up with the name of the business. In your second line, you're going to put statement of financial position. And in the third line in your notebooks, or on your folder pages, or wherever you all are using to write down these workings, the third line, you will have the period. And if you notice, it is as at, not for the year ended, but as at December 31st, 2008. Let's put our column headings now. The first column in the statement of financial position, also called the balance sheet, the first column is called the cost price column. The second column is called the accumulated depreciation column. And in the third column, net book value. This is all the headings of the balance sheet. So once you have that, we can now input our figures. Cost price, we have accumulated depreciation, net book value. Let us start with the first item in the balance sheet, which is called the non-current asset, also called fixed assets. We all know what are fixed assets, yes, you guys? You all know what are fixed assets? Everyone knows what are fixed assets? Everybody should know at this stage, at Form 5, you all need to know what are fixed assets. So once you all know it, let's look for it. We're already seeing here, just glancing my eyes to the trial balance, I'm seeing my premises is already a fixed asset of $40,000. So hey, I'm going to take this figure, $40,000, and I'm going to put it into my balance sheet as $40,000. Did my buildings depreciate? Was there any depreciation for the premises? Any depreciation? No, I believe the only depreciation was the motor vehicles, but talk about premises here. So I'm just going to put a zero. That's what I'm going to do. I'm just going to put a zero. And the value now, the net book value, if you all just put it here, net book value. That is what NBV stands for. Net book value. So what is the book value, or what is the final value of the premises? $40,000. Right? Next fixed asset we are seeing here. So I did my premises at cost. Next fixed asset is motor vehicles at cost. But we can't run too fast yet and put this figure and thinking that's the net book value. We had some figures affecting motor vehicles, like for example, depreciation. Depreciation affected the cost price of my motor vehicles. So therefore, we identify what the cost price is. So let's go with it. The cost price of the motor vehicles is $11,160. So I'm going to put it here. Motor vehicles, cost price, $11,160. Was there any depreciation? Yes, there were depreciation. And we did one of them already in the income statement. So I'm just scrolling. I'm looking at my income statement. And I know there's something with depreciation just now. Depreciation, look, 2,100. You all, what does accumulation mean? Or when someone tells you to accumulate something, do you add or do you subtract? It's just a question. And I know all it did SCA already. When you hear the term accumulate, yes, for Luke, you have to add. So accumulate means add, and accumulated depreciation means add the depreciation. Let me repeat that because all of not seeing the common sense. I just trying to show you here. Accumulated depreciation means total depreciation. We have a depreciation in the trial balance of 3860, and we did a calculation, or we had a figure in the income statement of 2,100. We are trying to calculate accumulated depreciation. So we have a trial balance figure. I'm going to put in a different colored ink because we're going to do some calculations here. I'm gonna put it purple. No, that too, not seeing that properly. I'm gonna put it green, right? We have depreciation in the trial balance, and we had a depreciation of 2100 that we accounted for in the income statement. My question to you all is, you see those two figures? Are we going to add it or minus it to get accumulated depreciation? Yes, Ola, we have to add those two figures. So 2100 plus the 3860 will give us 5960 as our total accumulated depreciation for motor vehicles. You all, because depreciation is considered to be an expense, and it also means that our fixed asset is decreasing in its value. If I were to calculate my net book value, I will have to look at my cost price, and I'll have to minus my accumulated depreciation to get my net book value. Yes? So you find the difference between the two. And now the value of this motor vehicle, which once cost 11,160, is now worth $5,200. Imagine that. Your vehicle that was $11,000 the other day is now worth 5,000. That's what we account for as depreciation. Were there any more fixed assets? Let me highlight this motor vehicles. We accounted for it. Going back as yellow. We did this and we did that. So we okay with all our fixed assets. We cannot see any more fixed assets here. I'm not seeing any more fixed assets in additional information. So therefore, let's total them. Let's total everything. So total of fixed assets, the cost price is totaling 51,160. Accumulated depreciation 59,60. Net book value 45,200. You all could double check these answers with your calculators. I just added everything. Just double check, right? The next section of the balance sheet is called our current assets. And we should know by now the difference between a fixed asset and a current asset. Pressure is on all you if all you really don't know the difference. Because not all tell all you go to all your form 4 books. That all you probably have on the bed right now because all you're going into form 5, all you're big. But if all you cannot find a difference between a fixed asset and a current asset, please take back out your books. Know your difference between the two terms. Yesterday, we spoke about current assets in class, right? We're talking about it here again. So if all you really can't remember, the recordings is in the WhatsApp chat to get the difference between a fixed asset and a current asset. Current means it's going to stay in the business for a short period of time. So for example, stock. And what kind of stock? Your closing stock. Your closing stock will be in the business for a short period of time. So let's take this figure, taking this closing stock figure, and I'm going to put it into my balance sheet. 36,420. Next figure, what is going to be current in the business is debtors. Debtors, those are the customers owing the business money. They are going to be in our books for a very short period of time, hence the reason why they are current assets. So debtors figure is 31,640. But there is something that will affect our debtors figure. Anybody care to tell me what that might be? There is going to be something. I'm asking you all a question here now. Listen. There's going to be something that is going to affect our debtors figure. Debtors owe us money. There are going to be cases where they can't pay us back the money. Besides calling them delinquent customers, we call them something else. What do we say? What do we say? Anybody knows? Okay, I see all you all you getting tired already. Class is not, we might go a little beyond time, huh? Just letting all you know, a little beyond time. But hey, I tell all you, we taking our time with this. I'm waiting for a response. Good, Michaela. Excellent. There's something that's going to affect our balances that we get from our customers. Sometimes customers cannot pay us back the money. Hence the reason why we have a safety net. Or remember when I told you the example with money in my phone case? Because there are so many times when I were to go out the road and I forgot my purse at home and I there with funny cash register and I'm like, oh gosh, I don't have my purse with me. I know I have a little safety money in my case in my phone. You know why? I want to be, I have my emergency money. Businesses also have emergency money. And that emergency money is their safety net. And that safety net is called the provision for bad debt. In case this customer comes to me next week in front of my face and tell me they can't pay me back the money, I know I have a backup plan. My backup plan is my provision for bad debt. Or remember that example from last week? For those who were here, give me a thumbs up if you all remember. Yes? Yes, or you remember? I gave him all some word of advice. Or you could keep all your money in all your phone case too, huh? Trust me. You'll never know when you forget your money is home and you have a little hundred just slip in the back of your phone case. Yes? You go to the cafeteria, wherever. Let me do come off a topic here. We have safety money. We have a safety net. So therefore, this safety net is going to now affect my debtors figure. So yes, we know debtors figure says 31,640 because on the debit side, debtors have debit balances. Not this 24, this is the creditors figure. 31,640 is my debtors figure. I am going to, yes, put 31,640 as my debtors figure. But there was a point in time when I had a provision for bad debts, a safety net, because of a customer or some customers. So my provision for bad debts, look, we have it here, 658. But remember, we had some information in the additional information. So which one should we use? Our balance sheet should be the updated information. Are we going to use the old provision for bad debt? Or are you going to use the new? Anything outside the trial balance is new information. We're going to use the new information, the how much is it? 580 to minus it from the debtors figure to get our net figure for debtors. You all, it is okay if you are not 100% on this. I just want you all to understand what is going on because there's a whole chapter on bad debts that you have to cover as well. Huh? You have a chapter on bad debts, chapter on depreciation, but I want you all So just understand, you don't have to do the chapter to understand this. It's common sense in telling you that your customers was owing money. We had a provision for bad debt. So therefore, we have to minus it from the debtors figure to get how much the net figure for our debtors. If you're still confused, don't beat up. We will come back to this later on in when we go to the chapter as well. But just understand why I'm minusing it. I'm taking it out from the debtors figure because look at what the note says. Hold on, let me read it for you all. It is to be reduced. My provision for bad debts to be reduced. That means my customers are paying me back my money. So this huge debtors figure is going to go down to from 640 to 31,000 because they're coming to pay me back the monies. So just understand those words. Understand those words, and when we get to the chapter, we will do some more calculations on that. Let's look at other items that will go in the current asset figure, in current asset section, are things like prepayments, prepaid expenses. We had some prepaid expenses, didn't we? Let me look. Yes, rates. Rates were prepaid of 166. So I'm going to put prepaid rates, and the amount is 166. We had any income owing? Any income was owing to the business? Yes, we did. So we're going to put income that was owing, which was the rent. We lent our tenant part of the building, or the premises, sorry. We lent our tenant it, and they're owing us money of 250. So we're going to take that, and we are going to put it into our balance sheet. 250. It is current. It's not going to be a long-term thing. They're owing us at the end of the period. They had to pay it back within the period. Within the period. That's why it is a current asset. Let's go to the next item that goes on the current asset. Cash at bank and cash in hand. And the figures that is in the trial balance, look at here. Cash at bank, cash in hand. We're going to highlight it one time. And we're going to plug it in. So what is the total of our current assets, you guys? We are totaling everything here. And that figure should give us 72,900. Are we all okay? If not 10 out of 10, at least 9 out of 10 up to this point. Are you all okay with that? I know a little confusion probably would have taken all place. That is fine. I'm not saying, well, you're not supposed to be confused, huh? But, well, it should be okay-ish, or I could put it okay-ish. We will get there, right? We go in more. We have a few more items to put in into this balance sheet, and we're done. The next subheading that we're going to put in this balance sheet is current liabilities. And we need to less current liabilities. Did I make this up? Am I telling you all a lie? Am I lying to you all? No, I am not. I will never lie to you guys. The format tells us when we have current assets, we need to less current liabilities. This is the format that governs our format. So we're going to less current liabilities, and you all should know what are current liabilities, yes? We did debtors already. Creditors is a current liability. So we need to account for the creditors figure. They're current. These are people who we owe. J. Jordan owing 24,320, and they have to pay it back within a short period of time. That is what when we say current liabilities. So 24 will now be minus. So we're going to put creditors, and the amount is 24. Look where I'm putting it. I'm just presenting it nicely for you all. I'm not putting everything under one column because we are aiming to calculate our net assets. But anyways, creditors. The next thing that we need to include are any accruals. Anything that was owing. Anything that is owing have to be paid back within that short period of time, especially if it's an accrued expense. It's current. And we saw that in the question, accruals was in part B. I'm going to highlight it one time again. We had sundry expenses owing and motor expenses owing. Accruals is a current liability. And we just putting in the figures. We also had here interest that was owing. When you have to pay back your interest, it's within a short period of time. That is also owing. We have to put this in as well. So ask yourself, anything that is short term that needs to be paid, it goes under current liabilities. So interest on loan, it was owing of 4,000. And we're now going to add up everything under current liabilities to get total current liabilities. So we have creditors, we have accruals, we have interest owing, totaling 28,415. You all know what we gotta do from here? Because we had a current asset figure, I'm highlighting it for you guys. I'm gonna highlight it. No, don't highlight it. I'm gonna confuse you all with too much colors. Current assets minus current liabilities. What would that give me, you guys? Current assets, 72,900 minus 28,415. What would that give me? It's going to give me a figure called working capital. Did I lie? Am I lying again to you all? No, the format tells us current assets minus current liabilities will give us working capital. So we got our working capital figure, which is going to now be 44,485. I saw that. Rihanna got that figure. Going once, going twice. Alicia, good. Lovely, you all got those figures. So 44,485 is our working capital. You see these nice two little figures here? We now need to minus it. No, sorry, not minus it. We have to do something. Minus or add? Let me look at the format. I don't want to make this up. We have fixed assets. We have working capital. What is this that we have in the center here? Plus, add. We have to add it. We had to add those two figures. We add in the 44, the 45,200 and the 44. When you add it, we get 89,685, and that is called our net assets. Am I correct? Let's check. Yes, net assets. And that is our first balancing figure for this balance sheet. All the other balance sheet need to balance, eh? That's the term we call it. Balance sheet. The sheet needs to balance. So we need to continue. We had to balance it off with this figure. So let me put it as green. We come back and we want that figure at the end here to be the same figure. So we go into the last part, which is financed by section. And that's the capital and the loans. How you finance your business? We finance your business through capital. We finance our business through loans. So we had our opening capital, which we saw in the question somewhere. Yes, we did, 50. That figure is going to go with me to the balance sheet. 50. My format then tells me After I have opening capital, I need to add net profit. Didn't we calculate our net profit just now? How much was it? You all told me. 74.27. I'm going to add it in. If it was a net loss, obviously, you know what you had to do. You know what you had to do. You had a minus. It was a net profit. So we add it. Opening capital, add net profit. Then we're going to have to less your drawings. This is money's taken out of the business for personal use. Jay Jordan probably buy pizza for himself and his family. Forgot he take all the money. It's not going to be accounted for in the books. We have to minus it. Money's coming out. Less drawings. Well, I don't know why I bought a pizza just now. Now I'm feeling for pizza. Drawings is 87.36. So we're going to take that figure and run with it and put it in the balance sheet. We're minusing drawings. And when you minus your drawings, you're going to, and you do everything here, you're going to now have your closing capital. Oh, it'll be almost done. 2 more minutes. We're going to a little be on time. 2 minutes. Oh, let's stay in there, please. I'm begging all you. We're almost done. That's one balance. That's one figure we have so far. Now, we want to account for all our long-term liabilities. Hey, we had some loans. Oh, we did bad debts already. Let me just highlight that one time. We did that. So you're looking at this whole yellow sheet here. Just whole yellow sheet. Look, we forgot one figure. Loan from P. Holland, 40,000. We could comfortably put loan P. Holland, 40,000 in this balance sheet. This is where we hold our breath, we pray, we do all what we have to do to ensure that when we add these two figures now, it needs to balance. Can I get a drum roll, please? Are we balancing off this balance sheet together? Did it balance? Give me a thumbs up if you all were able to balance it off. Total these two figures. Total them. What figure will you get? Did you all get the 89,685? 89,685. Please, please, pretty please. You all got that figure? Yes. Yes. I seen the S's. Yes, 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 yeses. Good. That is now the end of our balance sheet, and that is the balancing figure. That means our balance sheet balanced. Our balance sheet balanced. We could say thank you and good night. Although we did it. We finished a whole question. And you know, when we come again, we're going to do a lot more again. We're going to have a lot more adjustments. But for now, I hope you all are fine. You all are doing okay. If not, stay back. I don't mind staying back a little after to account for any questions you all may have. But you all were good troopers tonight. Excellent troopers. I give you all a round of applause. Have a good night, everyone, and I'll see you all back for the next session. Bye. All right. So for those who are still back with me, you all okay? Yes. If you all have any questions, I don't mind answering them. All right. Have a good night, everyone. I'll see you all next week. Please, God. Bye-bye.